let's go to the local front and begin with Santam, which is the market-leading short-term insurer in South Africa. It is controlled by Sanlam. Market cap 28.5 billion rand, a PE ratio of 22.8, dividend yield here of 3.6%.
You know what, let's go straight to Lance, because he's actually a shareholder and he knows the company inside and out. His own iCapital insurance operations are invested in partnerships with these guys. I know nothing about Santam, really.
Santam. Well, we'll just keep you out of the conversation then.
I know they've got a yellow umbrella as their logo.
Lance, I hope you've got more to offer than a yellow umbrella.
I certainly do. It's the preeminent short-term insurance company in South Africa, the market leader. It's really a conglomerate, a short-term insurance conglomerate, got 5 sides to it. If you want to be invested in the sector, this is the one to be invested in, I believe. Got a nice partnership with Sanlam, its parent company, in terms of taking advantage of opportunities in emerging markets, principally Africa, and it's done that nicely, the Sanlam Emerging Markets joint venture. And so that's the fifth part of it. Very well represented in South Africa, unbelievably well run. The discipline that they have is they constantly make underwriting profits. And that's how you measure the discipline of a short-term insurer.
Let's look at the share price graph while you are speaking, because that's not a shabby looking performance.
Plus, you got a whole lot of special dividends along the way, with excess capital being distributed, so that's noteworthy. But keep going, because you've mentioned one, but what are the other 4 parts of it?
So there's a commercial and domestic business in there, then there's niche or specialist lines, then there's a wholesale insurance business called Centric, then there's the reinsurance business, and there's the 5th one that I mentioned.
So to go back to the first of those 5, when you say retail and domestic, that's motor, individual, households, and then the niche is where they're selling insurance to companies for weird things like fire in your factory or your mealie field burns down.
Yes, exactly. So there's aviation, all those specialist risks that need
almost sectoral risks that are being focused in the niche element.
And you need specialist skills to underwrite and understand those risks.
So they make money from underwriting, which is great, because that tells you they're not writing bad business.
And you say regularly, repeatedly making money from the underwriting.
Repeatedly. If you take maybe the last 15 years, I think they're the only short-term insurer in South Africa to every year have made an underwriting profit.
Now you see, Paul, that gives a little context to the story. Does it whet your appetite for Santam?
They do, although the one thing I just want to ask Lance about is what is their policy with regard to managing the assets that they accumulate? Because I think they've been quite cautious and conservative, which sometimes works and sometimes doesn't, and is a function to some extent of the way the market's moving.
You're meaning they're not pursuing the leverage that they potentially could in the broader market, is that what you're saying?
But of course, you know, one doesn't want to be too aggressive in this kind of environment.
They're very disciplined with their capital management, let me put it that way. They don't take too much risk, they understand the level of risk, they take caps and collars on the equity portfolio, which has worked pretty well for them. And they distribute excess capital as soon as it hits a 45% solvency level. And that's the special dividends that you mentioned. So the total return, if you include the dividends plus special dividends, is phenomenal in Santam as an investment. Just quickly, the recent performance has been under a lot of pressure. Their trading update to the end of April, they've got a December year end.
To the end of April 2017.
Yes, that came out at the end of May. They said their underwriting margin is less than their midpoint, so their midpoint is 6%, halfway between 4 and 8. It's less than that, and that was before Knysna fires and Plettenberg Bay fires, which no doubt they were exposed to. They most probably take it. So I think we're going to see not great set of results in the interims to June 2017, which will come out around August, I guess, and you could see some short-term share price weakness, because the share price hasn't moved.
So perhaps, given your long-term outlook for Santam, that share price weakness around interim results may be your buying opportunity.
I believe it is. I believe buying weakness, it's most probably a little bit overpriced because of that overhang with the underwriting results, but buy into weakness.
Buy into weakness?
Yeah, I think it's definitely hot. And I think what you do, though, have to understand, looking at that chart, is that this is the kind of stock to own and then to really not worry about the short-term share price moves, just to hold it as
a kind of one for the bottom drawer, blue chip for the bottom drawer.
Bottom drawer, that's the right way to think of it.
Hot?
Hot.
Very hot.
Yeah.